Okay, so let me just do a quick trade recap of today's trades. Um, so Malt 4 twice. One was a loss because I made a pretty dumb mistake. This trade should not have been made, or I should have not entered. That's the correct way here. Yeah. So let me just start with overall we were bearish, higher time frame wise. So because we are at that upper limit here, good confluence. However, I would have taken that trade anyways. Then what we're just gonna do is we're gonna delete this because this is not as important. Gonna focus on this trend here. Bullish, as you can see here. Now, it's funny because I made a mistake, and I would say I was kind of lucky that this trend here saved me. I'll explain you right in a minute, because I just realized this when journaling my trades. That's why it's important. But yeah, essentially what I did was just kind of like weird because it's so logic. But we have this trend, and I kind of counted this as this trend, which maybe is valid, maybe it is. But it's like, well, maybe it's valid because we bounce off that 50, shows reaction, and we push up. It aligns with that upper limit, but it's like we break that. We have a Malt 4. This is a nice level here. I can see it. I don't even have to replicate this. Then we push down. We have a big push down, which I would not have expected. However, we did not touch into that lower limit, so that's kind of like expected. At least I think I would have expected this. I would not have taken maybe I would have taken a Model 5. Well, no, because we already broke this trend, so I was bearish anyway. So, but that's not the subject of that video. But eventually we broke this trend, which is that sideways trend. And as you know, for a trend we need 3 points, and we're 1 through 3. That's a valid trend. We don't need anything more. Sideways, and as you can see here, it reacts perfectly to that 50 and gives us that nice Model 4. So that was a mistake that I made, actually, which kind of shocks me. But I learned very good lessons today, 2 very good lessons. Then first trade was a loss because I don't know why I keep making that mistake, but it should not happen. But we react to that, we kind of sweep it, have a rejoin, then we do it again. And I thought, you know what, we have around the top, we break that again, we should go down now. However, one of my rules is if we break a trend to the upside inside of a bigger trend, this low is a protected low, or said differently, it is counted as a respected level of that trend, which means is we kind of draw it to that low here. Now here we kind of do have it too, so we don't want to have that low exposed, so this is not good, and the other ones are all inside of the trend, so this is valid. And then after that break I just entered, and had a pretty nice 1.8 or 9, or made a lot of money in that, because I risked like a lot. I think I risked like 2% of in that, now a little bit less, like 1.7%, which was good. So I'm up like 1.5% on the day, or 1.1%. But yeah, that's basically it. Is actually super simple, but the problem is you can make if you make such a mistake, stupid mistake, or actually these 2 mistakes, yeah, you can be can get stopped out pretty quickly. And yeah, that was super important. Let's go on gold, because this was just a mock-up trade. I just marked that out before it actually hit, but essentially this is a Model 8 combined with a Model 4. As you can see here, break that, have a nice level here. Don't want to mark that out now, but it's pretty clear when you see with your eye. With a nice, yeah, you know what, I'm just doing it. I'm just gonna do it. Costs me 5 seconds, and yeah, as you can see here, 75%. React perfectly, do that. Now I would have entered it, but problem is trend was a little bit too big, and I don't usually take Model 7s, or not yet, on these Model 7s on Model 4s, or I don't take a Model 7 version 4. Now what I saw in the morning was we had this trend, and we were overextending, and I did the same thing here. I marked that out here. I don't know, I think we broke it about here, doesn't really matter. Have my stop loss, I think. No, that's actually perfect. Wait, let me just check. Yeah, so we have this break, you enter here, and yeah, exactly. Oh, this is actually 5 minute, yeah. Not bad. So, exactly, so you enter here, and oh, that's actually also a wrong tool. Enter here, after the break somewhere, have your stop loss of that high, and put it to that 50%, or until it hits that 50% of this trend. So it would be about here. So that would have been also a trade to take. Then what we do here, we overextend again, but this is something that I'm not completely familiar with when it reacts again and overextends again, so would have not traded that anyways. And then here we break this overall trend, and this is like the area. This is like the area where I'm pretty sure that it's gonna hit the 50%. So, and just continue this trend. So I'm very sure about that. That's why I just put a just marked out that trade somewhere like here where it made a small retracement, had a stop loss where I was sure I'm not gonna get stopped out here. As you can see, it retraced a little bit into that upper limit and eventually pushed down, because I was also expecting that we just push down, right? So I just would want to have entered about here, because I was pretty sure that we're gonna hit that. So if you have a that amount of certainty, then you just want to be in the trade and take that win instead of missing out on that. And just even if it's like a 1 hour trade, like you're making 1%, or as much how you're risking. So yeah, it's just a certain win, and you don't want to miss out on that. As you can see, after that 50% retraces, does the Model 4 again, and then what it does a Model 5. As you can see, perfect. And yeah, as you can see, these models like bread and butter. Yeah, so this was it for today's analysis, and yeah, maybe see you guys tomorrow.